Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, July 23rd, 2023, and it is about 20 minutes in front of 11 a.m. here on the East Coast. I'm Wayne. My partner Ryan's working on our market outlook overview for the week, which will be coming out a little bit later today. And we just finished macro measure, and quite honestly, I have to get on the road. So I'm going to really be doing this off the cuff. Here's our trustee disclaimer. Here is our trustee intellectual property rights notice. And then this is what I shared in macro measure, which is really streamlined, but I think it was a good week for us to have friends visiting and also to help my son today to move back home after completing his time in college, because the normal stuff really doesn't apply as much as I think it normally would. So let's get this, now that we've shared this, let's get this shifted over. Bear with me as I stop the share and we start to get into the charts. Just going to go directly into those. And let me see if I can, for some reason, I'm getting a little resistance over there. Okay, let's get this screen share. Excuse me, going again, share. And the reason I'm saying that, and let me just bring up our grid of 12 up here, I think is where I have it. So we often start here, but I think the reason for that is just there's no way around the FOMC fallout, some of these mega cap names reporting. This is going to more than likely, unless there's news, right, really strong news developments, that will more than likely help determine the short-term fate of the market, the short-term fate of things. So, right, we'll probably come back and bring a lot more details into our slides next week, but just to keep some of these critical things that are out there and I think still concerning in the forefront of folks' minds, so they can then put them in the background when they trade, but just know that they're there. And that really, I think, helps guide your position management, knowing what may be coming sooner rather than later, or later rather than sooner, as it can be. But let's just take a quick glance here to get started. So a lot of the sectors that we talked about possibly reemerging did, right? That was one good thing that came out of it. We haven't always had that kind of a good follow through immediately in sector situation for as long as we've been doing it, because sometimes, right, there's fits and starts, there's news, the market gets impacted by this or that. But we noted how XLE was looking like it maybe could start to participate more a few weeks ago, and it started to do that a little bit lately. We also had the same thing in XLF, which we said, hey, this thing looks like it's potentially trying to break out, and they got a hold of those earnings and they ran with them. And remember, part of our reason for looking at these was because this has gotten left behind, right? That we were talking about the same thing at XLV. These were left behind in the sense that they're not technically speaking, they represent value, right, on the charts. I couldn't tell you if they represent value at all on a fundamental basis because I just don't have time to follow that stuff anymore. But in terms of, hey, these things haven't ran nearly as much as other areas, that was our take on it, right? And so they could in some ways be things that start to run and are laggards, essentially late to the party, that they start to come after. And that just has continued to happen. It actually happened, right, as is often the case. It was a little more forceful than I would have thought with earnings, right? They really were able to just virtually goose that through the week, other than maybe taking profits on Friday. XLE, you could see that as well, right? Green bars pretty much all week. The XLV had a tremendous week. We just coincidentally started talking about it a little bit more. And we said that some leader areas like XLC and XLK, they could even start coming back to life. XLK did early in the week, and then it had some rough stuff going on from midweek into the close, and so did XLC. That never really got fired up. But other things like XLP, we also mentioned, was looking better, and they could come after that potentially, and they did. XLY, we thought the same thing. They did a little bit, but then again, right, later in the week, that's when that came under pressure. So we had things like Walmart in there. I know Ryan had in one service, we had, I think it was UOA, we had Walmart, Ryan, we may have added it in Rebel Pit. I think Greg maybe looked at it. I want to say Ryan talked about Costco. The XTN was another one that we were saying probably overbought. They still managed to, right, keep this one, put a new high in before backing it off. So these are good signs, objectively speaking, right? I still have a lot of skepticism, which I talked about in the prior video, and went through a lot of tabs this week because it was more about, I think, again, framing where all the risks are and what's not being put on TV, well, what's off the radar. That's the reason we do all that in macro measure. But bottom line is, right, a lot of these things started to participate. These things we said XLB could start to do more. That did hesitate though, right? That did not do much. XLI did not do much ultimately, right? It's not too far removed from where it was. But XLU did. We actually have a bullish, believe it or not, we actually have a bullish trade in XLU in, I think, UOA Pro. And that's, at least there's an idea that's still valid in there. But it was, so that was nice to see that thing finally start to go. But, you know, this does indicate a little bit, right, of risk off when you get utilities running right in front of what looks like another interest rate increase, which is interesting, right? You get the staples running a little bit, healthcare's running a little bit. So keep that in mind. Also, like another aspect of this would be, right, that energy going up, that's again not good for inflation, not good for the consumer. So if energy does start to break out from here and gets through that high right there near 80, the XLE gets through that 87-ish, it would take a few more percentage points of push to even get there. But if it does, right, that would look really good in terms of, hey, is the, on the one hand, hey, the economy's, there's demand, if that's the reason, right, if that's the real reason for the higher prices. But at the same time, that doesn't help inflation, no matter how much they try to explain away that people don't need energy. And it also hurts, right? Ultimately, that should hurt your inflation numbers. So tough, another tough bind for the consumer. But that's what things have become. It's all about putting the consumer in a tough bind in the modern America. But there you have it. I think on the quick view, you could see all the RSI readings. I mean, you're all right. Even you probably were at 70 on the high in XLV. So again, that probably got a little bit too toasty too fast. So I'd be, you know, you got to be careful in there and see what happens. There were some incredible runs by some of those component stocks. XLRE is still hanging in there, right? And a lot of these things, despite maybe not doing all that wonderful, you can look across this grid and say, well, look, a lot of them are still holding the trend. Right, nothing has cracked yet, and it's a good sign, right? When basic materials are kind of bid up from where they were more. Now, if they don't break out, that's a problem, right? But if they do, that would also be a good sign. Industrials, of course, would be a good sign. But these do, it's a tough time, I think, now, because as I mentioned in macro measure, I think you're later in the game. I don't think you're in the 5th or 6th inning of this rally. Now, there could be a whole nother leg that we see unfold after this rally terminates, some corrective action sets in, and then we resume. I'm not saying that's not there. I'm just saying this current rally, to me, the current rally off of the October lows, and also right in the second half of the second quarter of the year, both of those are looking a little bit tired to me, a little overextended, but only because of the fact that they can gap these mega caps up, which are huge weightings in the major index ETFs. That's why I don't think you can rule out that there's one final take your breath away move, because gaps are a great way to create that take your breath away move, especially ones that are heavily weighted, right, that really impact the indices. And again, my question would be, what better way is there to really sort of cap the run that you've had and selling into, right, panic buying, right? That would, at very high prices, that would be the way I would choose to do it, right? If they said, well, yeah, you're going to ride this thing for about 9 months, and then at the end we're going to throw in the bonus of we'll let you gap everything up and then start to liquidate into that. Okay, you know, that I would be all right with that if I'm along managing bigger money. But overall, right, this overall has a bullish technical view in most of these sectors that we're looking at. The summary would be a lot of the laggards. We said this is a problem. They've, you know, mainly right energy, mainly financials, and of course mainly transports. They've all participated now. So we really can't say, well, no, we haven't been saying, right, they're objectively speaking, there's no legitimacy to this rally. I think the longer the rally has worn on and the more sectors has pulled along with it, the more you have to say, technically, you've got to give it its credit. I don't really, if I felt as though the economic picture was not as ostensibly at least bearish as it appears to be, I would probably be all in on, you know, despite all the worries that are out there, and some of them, of course, being very valid, I think, I would say, well, you know, market history is market history, right? Usually when this happens, the odds are you're after a significant correction, you're on the brink of another, you know, another leg higher in the market overall. That would be my guesstimate most of the time, and especially the way a lot of charts look, and the fact that, right, trends just haven't been broken, right? You can even look and say, well, isn't something overdone? Let's just look at something like housing, which I happen to have up here, right? That is, it's not easy to say, yes, that trend is not up, right? You've got to say that the trend is up. You've got to say that the trend is held. I mean, you can't even start thinking about something really cracking until some critical low is taken out, and you maybe have a lower high and a lower low developing for a trend change. You don't have anything like that yet. You're above the 20. Probably the first line in the sand here to think there could be bigger problems would be the rising 20 there in light blue, right? So you look at that and it's like, well, if I think housing's, you know, housing's definitely whistling past the graveyard, but it doesn't matter. It's been enjoying itself immensely as it's done so. It hasn't mattered yet. You know, in other words, my macro take hasn't been worth a hill of beans in there. And that's, again, exactly why I don't trade my take. So again, Qs, right? The leader really overall, and look at that, right? So that's just barely removed from a higher high, which is not all that far removed from the all-time high. And that is still above all SMAs rising, even the shorties, they're all stacked, and you're still above the 20, let alone the 50, let alone the 100, let alone the 200. So, and you've made higher highs and you haven't taken out a low. So until these things crack, right, that's my position, which is, even if I doubt, if I'm short-term trading, especially, even if I doubt what the permanent bulls are pushing and the chart action if the chart action is telling me this thing still has a chance to keep going and the trend is intact, I'm going to trade it, I should say, from that side, more frequently traded from the long side than I am the short side, because I'm not a big fan of counter trend trading. I'd rather trade with the trend. Try to find those key times. Now, there is some negative divergence cropping up, but the reality is, right, that it's really not all that bad. Like yet, I mean, we just haven't cracked enough to say, yeah, you know, negative divergence, now you're cracking. That could come about, but it just really hasn't, right? So some of the things we look at are XHB as it relates to things which we just checked out. XAU, right? This is one that we've looked at a little bit here and there. So we'll add this to this week just to give a quick look. That's getting better. If you look at this and you overlay the dollar DXY in Thinkorswim, you know, if the dollar is starting to perk back up, there's a good chance this thing could start to roll back over a little bit. So keep your eye on the dollar. They usually do move inversely to each other. We did see some paper in things like GLD, GDX. We did see SLV paper a while ago. There's a little bit picking up. It hasn't been completely dormant, but you know, the juncture to me is a little dicey here. So I'd be careful with all those. That just it is what it is that way. We have looked at other signs, like we have looked at crude to say how does the future shape up relative to the good action we've been seeing in the stocks. And usually, I think the future usually has the final say. And I think you have to like this at this snapshot in time. because, right, you had this very strong run. You had a relatively mild pullback. It found support right on that 100, that dash white line or gray line, which is the 100. And now it's trying to take out the 200, which is the last of them. And that would be taking out this high. And so have a higher high, have a higher low. It's not there yet though, right? You've got to, and you always have false breakout potential, much like, here, where you get up there, you get above that 150 in brown, then you roll over. So you're not out of the woods yet, but I mean, certainly this looks pretty good. And if it finishes the month strongly, it could be the start of something, I think, a little bit longer in duration, a little bit bigger. So I think that's one that bears watching. I would keep an eye on the XLE sector for now. I think that there's some constructive action that's been going on in there, and it could get a little bit even more constructive with a good, strong finish to the month. So we'll see what happens there. Another one we've kept an eye on has just been the copper future, just to see globally, right, is copper coming into really where a situation where it's in more demand, and we kept an eye on it, but right, it's not at lows, but that's kind of at that spot where you're like, well, kind of like a similar high, a little bit less. It looks like, well, then again, maybe not. It might just be the angle I'm looking at this on. Could be actually a little bit higher this time. Yep, it does actually look like it got a little higher. It's just the angle I was on, but holding here between the ganglion of SMAs. So nothing there. I think you should just put an alert on this thing, right? Somewhere just shy of these highs. Just to say, look, if that's starting to perk up, not that you're trading it, it's just that, hey, that thing really is starting to put more constructive technicals in place. That's a good sign for things globally or overall. We've gotten away from the future for wood. We've had to use a couple ETFs and just kind of trying to see where they are. And if these charts look good, I'd be surprised, and they don't. They don't look as good, but let's give it the benefit of the doubt for now. Again, pops above the 150 in brown, the 200 in purple. Now it's coming back right near what we would probably say there's a flat line near here from prior action, right? Prior highs, lows that were put in near here, some closing prices that were put in near here, and that's right near the 200. So if it can hold above here and start to go again, that would be a good sign. If it can't, it starts retreating, it'll be a false breakout for now. And then that could bring about, a lot of swift selling, because a lot of people always looking for positives. They buy these breakouts, they don't materialize, and people don't get out. They don't stay disciplined, they don't get out. But those two are also something we've covered, cut and wood, and they usually look pretty similarly. And just the way we saw some other charts, I figured they would look the way that they do, and they do. So they're at a critical juncture, just because it's either hold, and that preserves your chance to go later. Maybe after you hold this week, you try to go if the market stays buoyant, the economy supposedly keeps whistling past the graveyard somehow. If not, right, that's problematic. So a lot of things become problematic for housing, and I think housing becoming really problematic is a really big problem overall for the market. Let's see, I'm trying to think if there's anything else I can cover here in sector situation, just because I am so pressed for time. I think that's probably going to have to be a wrap. I am pressed for time because I've got to pull this move off. But the other side of it is, right, that sectors are going to be sectors this week. I'm sure some of these will act independently, but just remember, ultimately, right, a lot of things, as it should be, really are influenced by interest rates. And so there's no denying that. And ultimately, I think, right, the most important things are influenced by interest rates, and certainly, right, financing and things like that. And if that just keeps going up, that is just not a good sign overall. So if that rate increase goes through, and then the language that's used to talk about the future isn't all that wonderful, I'm trying to think of where did I leave things off? I thought it was up here somewhere. I'm probably gonna have to let that go, unless no, it's not in launch meeting. I was just going to try to see that the CME stuff, to see if where the CME was, but I do think there was still a pretty good chance that we stay elevated when I looked at it on Friday. So I think there's a much greater chance we stay elevated through the rest of the year. In other words, once this next increase comes about this week, as the market expects, over 99% chance it's being looked at right now on the Fed watch tool. After that, rates staying elevated for the rest of the year, maybe going higher, are favored versus rates going down. So rates going down before the end of the year is now the low probability scenario without question, according to the Fed watch tool. And with that being the case, to me, that's rates higher for longer, not good. Again, another thing that that's why I have a problem really buying into all that they're selling. And again, I hope to be wrong, but I think you're very late in the game. You might have this final take your breath away rally. Then again, you might not. But I think you have to start being a lot more nimble and remember what's coming up, right? In terms of seasonality, it starts getting bumpy really very soon. You could almost say you're at the doorstep of getting bumpy historically with respect to third year in the presidential cycle seasonality. And so be on guard, be opportunistic. Don't overstay your welcome. Don't fight the trend until you really believe it's on the verge of cracking. And if it does crack, remember they can still try to put, a little false breakdown together. So stick with all your discipline and tighten things up, stay on top of it a little bit more. And maybe there's going to be, hopefully there'll be bi-directional opportunity. Nothing would make me happier than during what we would call the corrective phase, we get a nice up and down action, right? That we shift between nice, strong pops and significant drops. That's good for people that are willing to just swing trade for a few days to a week. And you just go with, the flow. And what I'll try to do in UOA Pro is just get ideas lined up in both directions. So hopefully if there's enough paper to do that, of course, and then we'll be ready to rock and roll with whatever they throw our way. So everybody, I hope you got something out of this. Sorry about having to kind of do it on the fly, but sometimes life just makes things tougher than usual. And that's one of these weeks. It's often the case for us in the summertime, but we don't usually have a kid moving home from college on the same day very often, having said that. So everyone have a great conclusion to your weekend. I hope something does help you out this week that we've shared and talked about today in the videos. And I'll be in touch through all the normal channels. Thanks again.